Which stocks could be sales growth stars and dividend growth stars in the next few years? We looked through thousands of stocks and came up with a list of 14 names that we're going to share with you in this video. But first, what's the secret formula behind our exclusive list? Let's get to that now in this week's Ticker Take.
When the market winds blow high or low, tune into our show. It's Ticker Take, you know.
Okay, John, so how did we pick these growth stocks?
Caroline, the average company in the S&P 500 is expected to see sales growth of at least 10% over the next 3 years. So the companies that we tracked had to be on pace to do just that.
And what about dividend growth?
The average company in the S&P 500 is expected to see dividend growth of about 6% over the next 3 years. So we said, okay, each company has to be expected to see its dividend grow by 10% or more over the next 3 years.
And do analysts like these stocks?
They do. These stocks are recommended by more than 2/3 on average of the analysts who cover them.
Okay, John, so to recap, analysts have to expect sales growth of at least 10%.
Yep.
Dividend growth of at least 10%, and 2/3 of the analysts have to like the stock?
That's it.
Okay, should we get to the list?
Let's do it. But first, a friendly reminder, this is not financial advice.
In alphabetical order, stock number 1 is Accenture.
The consulting giant is expected to see revenue growth of more than 20% and dividend growth of 14%.
Stock number 2 is Alphabet.
Wall Street would not be surprised to see 45% revenue growth over the next 3 years and a notable dividend increase for a tech giant estimated at 17%.
Stock number 3 is Broadcom.
Despite some of the recent AI jitters, Wall Street's expectations remain high. Analysts are expecting upwards of 50% growth in revenue over the next 3 years and 10% growth in its dividend.
Stock number 4 is Dell.
Analysts are looking for 20% revenue growth and a dividend lift of about 10%.
Stock number 5 is Eli Lilly.
Analysts have big sales growth expectations for this weight loss drug maker, and they're expecting steady dividend growth as well.
Stock number 6 is GE Vernova.
It too was impacted by recent AI jitters, but Wall Street still has high hopes. There are big expectations on Wall Street for GE's energy business on the dividend side, and sales growth is expected to be more than 20%.
Stock number 7 is Meta.
Yeah, there are big expectations for sales growth from Wall Street. 45% sales growth is expected for Facebook's parent company and 15% dividend growth.
Stock number 8 is Monolithic Power Systems.
This company, which designs chips that distribute electricity efficiently through all sorts of gadgets, is expected to see sales growth of more than 60% and dividend growth of more than 15%.
Stock number 9 is Nvidia.
Even with fresh debate over how much AI spending we'll see, analysts are watching for big numbers from Nvidia in the next 3 years. Wall Street expects sales growth of more than 100% over the next 3 years and a double-digit percentage increase in its dividend.
Stock number 10 is T-Mobile.
The current consensus on Wall Street is 15% sales growth in the next 3 years and a dividend lift of about 25%.
Stock number 11 is Visa.
Yep, the current consensus is sales growth of more than 30% and a dividend increase of about 12% in the next 3 years.
Stock number 12 is Vertiv Holdings.
This AI data center growth play is expected to see sales growth of more than 50% and dividend growth of more than 20%. After a recent roller coaster ride for the stock, analysts still have big expectations.
Stock number 13 is Vistacorp.
This power play is expected to see sales growth of more than 20% in the next 3 years, plus double-digit percentage growth in its dividend. We should note, however, that since the DeepSeek news, some analysts are now wondering if lesser energy needs for the AI boom will result in a dividend growth rate that comes in below 10%.
And stock number 14 is Zoetis.
The pet health company is expected to see sales growth of about 20% or more over the next 3 years, with dividend growth expected at around 14%. Now, these are Wall Street opinions, not my own, and they are subject to change. Thanks for watching. Thanks to Caroline. Thanks to MarketLabNewsletter.com for the graphics. And don't forget to subscribe so you don't miss our next investing video. See you next time.